So let's come back to India, since you said that the time has come to nibble in right now, purely at an index level. And Sandeep, since you do track technicals as well, we've hit the lowest RSI since March 2020 already. We're at an 8-month low. What is the screen telling you? Do you think we're at the end of the pain at an index level per se?
See, to be candid with you, I'm not a great chartist, okay, or technical technician in that sense. I'm a good observer, and we are predominantly a behavior house. So we look at more from a inflection point rather than say looking at the breakout or breakdown, because that may not give you a correct perspective, or we may not have that ability to read up to that extent. What we are looking at when we said in July 2024 the complacency was high, we are at extreme inflection. Maybe September, October, India liquidity peaked out. That was the extreme inflection end. Now, if I have to say with good amount of confidence whether are we seeing something similar inflection points on the other side in the most of the indices, the answer is big no. But if I have to get into some stocks, then answer is big yes. Many stocks are now have reached out and they are trading in the hated zone or neglected zone. That's the way behaviorally we define. So I'm looking for those opportunity where stock has already corrected significantly from admired territory and now they're trading in neglected zone. Nobody can get it perfect bottom. But when stocks hits neglected zone or remain there for a long period of time, your downside is at least protected. So we are looking at those ideas where we see my downside is protected. But because in this environment, like we always say, in the risk of environment, safety first, liquidity secondary, and you have to protect. Okay. With that background, I think these are good safety stocks where downside could be limited and maybe upside can be very meaningful whenever market recovers and when we see a risk on environment. So I think I will not play with the thesis of particular index level. And it's they are more of a psychological level. Now, a lot of people are looking at 21,800, where we have seen a budget low of 22,500, 21,500 sort of thing. So I think those are psychological numbers. Can market test or retest those levels? Maybe answer is yes, but I will not play index game. I will look for stock specific opportunity. We have been cautious for a while. That's the reason we are getting brilliant opportunity to deploy money. Selectively, I am buyer in the stock, including the small caps names.
Interesting. Since it is safety first right now, Sandeep, would you say have a bias and tilt towards large caps, or do you think it's meaningless? It's really now about individual stocks and companies.
See, when you look at on a relative basis, like right, we believe that large and mega large will still outperform small and mid. Okay, that is more from a relative basis. Okay, but we also have to look at in absolute terms where opportunities are emerging. So that's the reason it's a better approach to look at stocks rather than maybe you have to live with a short-term pain in some of these names also, because you get sometime get tired that you bought and the stocks are not moving, still struggling or maybe marginally correcting only. So the way I look at in the opportunity is that let's identify stocks which have reached neglected and hated zone and keep on accumulating these names, because the reversal will happen when you see a risk on cycle coming back, and that's the time these stocks will rebound sharply because they have already corrected their journey, more from a price correction also as well the time correction also. So I think the approach will be slightly different. We will definitely avoid all those stocks names, which have till last year in the trading in the admired zone. Okay, they have still not corrected. I think the downside is much more in so-called these hype stocks where correction can be still very meaningful, and a lot of people are hiding there. If you're looking at from the large family office, ultra HNI customer, including FIs and domestic mutual fund, these were the stock which has performed very well in last 4 years, and people are hiding. I think I'm more concerned about such names rather than looking at opportunity where correction is very meaningful. Ultimately, see, it's all about earnings, okay? And if the multiple has shrunk a lot, and if we see earning momentum in some of these names, then I should be looking at the buying opportunity rather than saying that, let's see index to bottom out or mid and small to be bottom out. Then we take a conscious call. We may not get it at that price, maybe at, so it makes sense to participate currently also. I'm not saying one should be very aggressive buyer, but one should be selective buyer.
Hi Sandeep, good morning. This is Shrishti also joining in. So now if it's the time to actually go ahead and look for some buying opportunities, if we can help us understand that which are the stocks or sectors that you are eyeing at this point in time, because the last time we connected, you believed that FMCG and staples could make a comeback. IT and banks were not in your preference list, but has anything changed? And we also get a sense that this year belongs to individual stocks rather than sectors. So if you can give us some sense there.
So I think given the noise which is there, okay, it makes a lot of sense to more focus on the domestic consumption, domestic economies. So I think capex cycle got affected in last many quarters or so. I think government spending will start increasing. So we remain very constructive on the large infra names, okay, because ultimately India has to grow, capex will stay. So large infra is followed by materials. Also, if infra has to put in place, then materials will play a role. So those are two important sector for me. Then I think pharmaceutical has also corrected. And even if I go by the tariff noise, also US cannot afford to deploy very large tariff on the generic side because life will become difficult for the consumer out here in the US itself. So I think that is the another area which we like. We like hotels and hospitality as a sector. And with not only banks, I will say overall financial services firms looks good, which include insurance also, NBFC also. I think buying opportunity is there, and they have been trading in the neglected zone for a while. So, and with some recent changes in the RBI circular also, it's clearly give indication that these are the names where my downside is limited and upside could be meaningful.
All right, but Sandeep, specifically, if you can talk to us about the IT space, because back then in January start, you were not liking that particular sector as a whole. And what we are seeing right now is that the stocks have already have their share bit of a correction. Is this a time to maybe look out for some IT counters?
The two problems with IT which we were facing for a while is that the if you look at earnings momentum is completely missing. They have their own challenges, okay, with the AI and ML coming to picture. So that's the first point. The call which we took in not to have IT in our portfolio was largely linked with the US market when we said in January the vulnerability in US is high, and if I dissect that vulnerability, then we saw the one of the highest vulnerabilities there in the tech sector. Okay, so that's the reason we said that I will avoid this sector if I expect a correction or deep correction in US. We talked about 15% sort of correction in the US market itself. And if you look at with the lag effect, it's playing out quite well. So that thesis was more from earning perspective, and as background was US. So if US corrects sharply, let's say when corrects further, and if we get some opportunity, we will definitely limble. We don't have any love or hate in relationship with any particular stock. You know, we are pure opportunist. If we think opportunity is there and Nasdaq looks like bottoming out, I may look for buying opportunity also, but not at this point of time.
Talked about pharma being one of.
If you like this video, then like, share and subscribe to ET Now. If you like this video, then like, share and subscribe to ET Now.